Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Richard Matthews of Pardus FX with us, wrapping up the year. Dick, what do you make? Last week we had the FOMC, the Bank of England, the Bank of Japan. Just the other day we had the European Central Bank, we had Norges Bank, we had every central bank. What do you make of all this hoo-ha, and where does that leave us? I mean, stocks are kind of recovering after an early week sell-off. We've got the dollar that's kind of floating around, and the euros just kind of sitting around 106, but holding up pretty well. What are your thoughts with all of this?
Well, as we talked about last week, we thought the ECB would come out fighting and the Fed would come out fighting, and Jay Powell did. He's not mucking around, and that the Bank of England would be moderately dovish, which they were. I think basically Powell is saying we're going to go a little bit higher, maybe not that much higher, but we're going to hold rates there, and I think they're going to hold rates there longer than people anticipate. I think the ECB is going to be pretty hawkish as well. It's going to raise rates. And the Bank of England is going to go, oh, I don't know what we'll do. We'll just hope, and everything will come good. So the risk of being a broken record, I still think the sterling is going to come under pressure. I still like the euro and I like the dollar, but the dollar's being affected by year-end pressures still. So, I think maybe once we get into January, you could see a recovery there.
Well, we also have the Bank of Japan that kind of made a surprise move this week where, the dollar yen came under some severe pressure. We broke back below the 200-day moving average.
Yeah.
We're closing in on 130, the figure. And, you have central banks globally that are trying to tighten here. I mean, stocks are recovering. They came under pressure. But here we are at year end. I mean, do you continue to buy risk? And if you buy risk, then that means the dollar probably is going to stay under pressure, going into year end. I mean, or do you just stand in front of it right now? What are your thoughts?
I step aside. My thoughts, as I said a couple of weeks back, don't fight the Fed. If you think the market's wrong, step aside. I thought the Bank of Japan was really interesting. I'm not sure people have really picked up on the fact that they're joining the party. They're late to it, but they're joining the party of the hawks. And I still don't understand why stocks are this high, but people just want that Santa rally to me. And they say, oh, well, inflation's easy in the States, unemployment's worse than actually anticipated. There's one or two stories today about that. Well, that may well be the case, but inflation's still what, 3.5 times the Fed's target? They're going to hold rates there. And I think we might be in for a new era of high rates again, or what I grew up with, relatively high rates of maybe people have just got to get used to rates at 4% and 5% for a few years to come, just as they dampen everything down.
Okay, well, there's a lot of indicators that are suggesting that inflation is going to fall pretty rapidly and next year, but you're not in that camp.
No, I'm not saying that. I think that it will fall pretty rapidly, but I think that they will stay high and make sure that inflation doesn't come back. It's all very well getting it down the first time. It's if it bounces back up again. And I read something recently, and I thought it was pretty interesting that see a central banker get sacked because unemployment's high, but you get a central banker who gets sacked really quickly if you debase the currency, which is what inflation does. So I think they're going to really err on the side of caution. And secondly, you're looking at it from understandably so, from your position in the States. If you come to London or you come to Europe and see how high inflation is here, it's much higher than in the States. And it's not really starting to come down. And we're getting wage push problems here. We've got the nurses on strike looking for 19% pay rise. Yeah, 19%. Ambulance drivers are on strike. Train drivers are on strike. Border guards on strike. So basically, you can't go anywhere. And these wage pressures will start feeding into inflation, I'm sure. So inflation is a long way from being beat in the UK. And funnily enough, the Bank of England is the last one to raise rates and is the least aggressive. It was the first, but it's been the slowest.
Well, it does seem like to me that the sterling is really underperforming. as we head into this the holidays, especially if you're looking against the euro. But now I'm going to ask you one last thing, before we go. We had a pretty big divergence between opinions on central banks following the ECB and the Bank of England. Do you want to talk a little bit more about that? Because you got the European Central Bank, where they're hiking inflation forecasts, and it seems like that they are making plans to tighten the balance sheet, pretty solidly anyway. But you got the Bank of England. You got a couple of members that are not that are voting against. Yeah,
they're out to lunch, basically.
Yeah. out of touch or out of lunch.
Out to lunch. Out of control. Several points. First off, the European Central Bank is obviously dominated by Germany, and Germany's influence in Europe is all pervading. It's one of the great powerhouses, and people of my age group can remember the Second World War. I wasn't in the Second World War, but can remember the damage that the Second World War did to Europe, and that all started with hyperinflation getting out of control. And it's a really, really sensitive subject in Germany. And I think the ECB will continue to be really, really hawkish, and they're right to be. So I expect them to carry on tightening, and they'll start doing QT. The Bank of England is praying that the fiscal tightening that the Chancellor of the Exchequer is doing will actually help and calm inflation down. I think they're bonkers. I was talking, I think it was last week we were talking. Inflation here really is not the CPI figure. You want to look at the RPI figure, which includes food and things that affect us all. It's 16 or 17%, and that's a scary number. It's a scary number when I go into the supermarket and I do the weekly shop with my wife, and I go, boy, that's I can't believe that's so expensive. And there's some profiteering, but inflation is veering out of control in the UK, and the Bank of England is sitting there being complacent about it. And harking back to those two who voted for no change, I mean, it's just ridiculous. They should just be sacked.
Well, let's leave on this note. What do you think is going into 2023, and we're gonna end up catching up after the new year? Yeah. But what do you think is the best trade between now and the new year, if you had to take one?
I'd be short of sterling and long of peppermint sticks.
Long peppermint sticks, short sterling. All right. Well, let's see if the 200-day moving average will give way in the sterling, which currently is at we're actually trading below it today, and it's about at near 121. You think we stay below it? Yeah,
I do. Right. I think we look for 117.
All right. Well, from your mouth to my trading screen, it is. Well, Richard, I always love meeting with you, and it's been a great 2022. We appreciate you spending time with us each and every week. If you like what he does, make sure you give him a thumbs up, subscribe to the channel so you don't miss any of this exclusive content. Dick, how do we follow your work and what you do at Pardus FX?
You can follow me on Twitter at Dickie Matthews with the second S is a 5, or you can catch me on pardusfx.com, where my daily thoughts are posted. And I've just got one last thing to say. Happy Christmas to everyone, and hopefully we all have a prosperous new year, and we don't pray for a pivot too long. And that's too many P's to end the podcast on.
All right, Dick. Well, thank you so much for spending time with us, and Merry Christmas and Happy New Year to you and your family.
Cheers now. Bye now.
Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.